What is going on, everybody? It is Tukey from Tukey Trading here. Hope everyone is doing well. It's been a while since I've last uploaded onto this channel, and I'm excited to get back into it because I have some really cool plans to start posting a lot more. I know I probably said that a bunch in the past, but I definitely have some cool things coming, so definitely stay tuned for that. But I do want to make an updated video on the strategy, the trading setup that I typically look for when it comes to taking my entries on the charts. Now, whether you know how I trade or whether you don't, the main way that I've been trading these past couple of years is by utilizing supply and demand within the markets. Now, easiest, most simple way to explain that is essentially we're just looking for areas on the charts where heavier areas of supply was being inputted or heavy areas of demand was being inputted. So supply being pretty much just strong areas of selling pressure and demand being strong areas of buying pressure being inputted onto the charts. Keep in mind, market moves based off of money, right? So if we're having more buying orders being inputted, that's going to lead to stronger demand. If we have more selling orders being inputted, that's going to lead to stronger supply, right? So we as traders want to be looking for those areas where pretty much we are seeing bigger moves, because bigger moves equal out to more money that's being inputted into the markets. And like I mentioned, money, lots of money is what moves the markets, right? So we're pretty much just looking for areas on the charts where lots of money is being inputted. So let's go ahead and hop right on into it and get things started. One thing about me is I just like to make things as simple as possible and make it as easy as possible for you guys to understand things. So let's go ahead and make some magic happen. So we're going to be starting on the 5-minute time frame, and the way that we trade with supply and demand is going to be utilizing our supply and demand zones, which are pretty much just price ranges on the charts that indicate or previously indicated lots of selling being inputted or lots of buying being inputted. So we're going to go over two different examples, one being a supply example and another being a demand example of how we're able to trade with that. So here on the 5-minute time frame, we're on SPY, the S&P 500. First, we want to, of course, be on the 5-minute time frame. And then second, which is most important, we want to be looking for an aggressive move, a big move on the charts, whether that's to the upside or to the downside. So first, let's start with a supply example. Therefore, we want to be looking for an aggressive move to the downside. So here we can see a pretty strong move to the downside, also indicating an area here where lots of selling orders, selling pressure was being inputted. So let me go ahead and just remove this. Now, when we see that big move, moving on to step 3, we want to mark out the candle that started the aggressive move ultimately, right? So let's go ahead and get our box out and then mark out that candle that started the aggressive big move to the downside. And the reason that we're doing that is we're marking out the point where price previously had an excess of selling orders being inputted, because lots of selling orders being inputted just means lots of money being inputted into the markets. Money is simply what moves the markets, right? So we marked out the candle that started the move to the downside with our box, and we just extend that box all the way out. Now, as you can see here, first time price taps into our supply zone, we can see that we're already getting a strong rejection, right? Now, a good sign here when we first tapped into this zone is price did not invalidate this supply zone. What that means is price didn't break above this zone, indicating that those selling pressures, that selling range is still valid, is still an area on the charts where those banks or market movers, whatever the case may be, is going to want to utilize that area Keep in mind, the supply area, supply zones are also marked as a price premium. So pretty much when things just get to a super high price, basic supply and demand price, there's obviously people that are going to be selling, right? Going to want to be getting out at that point since price is at the highest point possible. So boom, that's exactly what happened here. Price failed to invalidate that zone. And what a true invalidation looks like is once, let's say, for example, price were to come up into this zone, we would see price then break above and continue higher. But that's not what happened. We respected and rejected off of that zone, which gave us confirmation within that zone, right? Within that price premium area. Now, if we were to trade off of this, first, obviously, we have our valid, or we have our confirmation of the supply zone being valid. Now, in terms of where we would take profit, where we would look to exit, is what I'm doing is I'm typically looking for in this case scenario, the nearest key low or the nearest strongest low, which would be right about here or right about here. So let's just go ahead and then mark it right here, right? So we see a pretty strong support area being created here, or just a strong low being created right here. Even if we extend it out all the way, we can see that this is pretty much, a strong low area. Now, boom, that's exactly what we would want to be targeting for our exits on our trade. Now, let's say we were to go ahead and take a position on this trade. My stop loss when trading with supply and demand, which is the amazing thing about it, is my stop loss is typically almost always in the same spot. And trading with supply and demand also gives you a very minimal risk, which is a super key thing when you're trading. You want to make sure that you are minimizing the amount that you're losing if that trade were to go against you. So boom, our stop loss would be a break above that supply zone. Why is that the case? Because a break above the supply zone invalidates that area, meaning it's not a confirmed valid supply anymore. It's not an area where the traders would want to look to utilize like how they did previously. But in this case scenario, it was never invalidated and it respected that zone, which gave us the confirmation that that zone would likely work out. So boom, we would target this key low here. And as you can see, if you were to take an entry right off of this supply zone, even if you want to wait for a little bit more of confirmation within that zone, you can still do that and you can see the trade working out beautifully. Pretty much once we tapped into that zone, started to get that rejection, and we didn't just slowly move down. You can see there was starting to get some serious volume being inputted. Why was that the case? Because once price tapped back into that price premium area, that supply area, like I said, these are the areas where banks, institutions, the market movers are looking to step in the most, looking to input the most money. The most money being inputted is what ultimately moves the market the most and moves the market the fastest. So boom, you can see price taps in and then pushes to our take profit area. And even if you wanted to, be a little bit wild and target the next lows, which would be all the way down here, let's mark this out. So if you wanted to look for a bit of a bigger trade, boom, we would mark this low out right here. You can still see that trade working out in our favor, continuing all the way down to that low. And the reason that we're targeting these strong lows, these key levels, is because in case that trade does go wrong, we want to make sure that we're taking profits at the best point possible so that trade doesn't reverse on us, right? Because key levels are simply just areas on the charts where price is likely to reverse. Therefore, that's where we want to be looking to exit before price reverses. So boom, that's a beautiful example of supply. Now moving on to demand, I'm actually going to be covering the trade that I took today. Also keep in mind, I'm going to be making more follow-up videos on how I use supply and demand in terms of the confirmations that I look for, etc. So stay tuned for those, but this is just going to be the first part. So now that we got our supply example in, let's go ahead and focus on an example of demand, an example of where an example of where we saw an excessive amount of buying pressure or buying orders being inputted into the markets, right? Buying orders mean, or lots of buying orders means the price of whatever you're trading is continuing to go up and up and up, right? Because that's what demand is. The more demand there is for something, the more buying is going to be, inputted. So as we can see here, first step is obviously to be on the 5-minute time frame. Second most important step is we want to be looking for an aggressive move to the upside in this case scenario. So as we can see here, we can see a pretty strong move to the upside from this low. We can see from this point on, price pretty much just shot all the way up to these highs. Now, step 3, which again is most important. All the steps are important, but they're important in their own ways. So we want to mark out the candle that started the aggressive move. So in this case scenario, we're going to be marking out the wick. I'm typically looking to only mark out the wicks for the candles because as you can see, if we were to mark out the whole candle and the wick, the zone would just be way too wide, and that's not what we want because that messes up our decision making in terms of where exactly to enter, and it also messes up our risk management because if our zone is so wide, then our risk is bigger, and we don't want that to be the case. And for this one, obviously I only marked out the candle because there's no wick for that one, okay? So we're going to be marking out the wick for the candle that started the aggressive move to the upside. That's exactly what we did. Extend that zone out all the way. Now what do we see here? We see price push down below into this zone. And like I said, we want to be looking for whether price invalidates that zone or not. Meaning, does price break that level and continue lower? Now, in this case, it looks like it did, right? It looks like, boom, it pushed down below, but it never fully broke that. And what I mean by that is a candlestick never closed below. You can see this candle here, it's still trading inside the zone. This black candle here, it's still barely trading inside the zone. You can see it's still somewhat in the zone still, which means we're still on the good side for the zone. It hasn't been invalidated. Then we can finally see this candle, which start to give us some confirmation within that zone, showing those buying orders starting to come in, showing that rejection starting to come in. When you start to see that rejection within that zone, especially if that rejection starting to pick up in volume, that's always a good sign for your trade. And it's always a good sign showing that that zone is still intact, whether it's supply or demand. So boom, as you can see here, price started to respect and reject off of this demand zone. And as you guys can see, here is where I took this trade. So right here was my exact trade setup. And like I said, my stop loss is pretty much always in the same spot when I'm trading with supply and demand. And that's just going to be a break below our zone. So let me just go ahead and turn this off and then just kind of run through. So I'm just going to delete this and kind of show you guys my thought process behind this trade. But this trade was something that I took today. Obviously, as you guys can see, ended up working out in my favor. So boom, let's just delete this. Now, once we start to see some rejection within that zone, that buying volume starting to step in, that's obviously that's obviously where we can start to get some confirmation that that zone is going to work out and that buying pressure is going to start to step in. Keep in mind, there are two types of orders that are constantly being inputted into the markets: buying orders and selling orders. Think of it like a scale, right? When there's more buying orders being inputted, price is going to go up. When there's more selling orders being inputted, price is going to go down. When both orders that are being inputted are equal and the scale is kind of the same, that's typically where we see consolidation, choppy moments within the markets, right? But in this case scenario, we want to be looking for buying orders starting to step in How can we look for that? That's why we have our supply and demand zones, right? So boom, we get that confirmation. If I were to take this trade, we would put it within our zone once we start to get some signs of buying pressure stepping in, some signs of volume stepping in. And like I mentioned, my stop loss is pretty much always in the same spot. That's going to be an invalidation of our zone, meaning it's going to be a breakthrough of that zone. Not something like this. We want a full break of our zone, meaning the candles close below and continue lower. Or for this one, if the candles were to close above and continue higher, that would be an invalidation of this zone. That was never the case though. It respected and rejected off of this zone. Why was that the case? Because those selling orders started to come in. That selling volume started to be inputted. Therefore, we had the move to the downside, right? So boom, we have our trade set up now, our entry right here, our stop loss right here, and we would look to be targeting the nearest key level, the nearest key highs in this case scenario. Since we're trading with demand, we want to look for the nearest key high. If we're trading with supply, we want to look for the nearest key low. You guys get the point. So boom, you can see here we have a resistance area pretty much like right here, as you guys can see. So boom, we would target right about there for our take profit. And as you guys can see, this demand zone, once we start to respect, reject, see some buying volume being inputted, which obviously is this strong move right here, then boom, works out perfectly hits our target, which was right here, this key level. And also, as you can see, it didn't just slowly move up. You can see that volume really started to step in. We can obviously tell by the size of the candles, by how fast it hit our target, right? So trading with supply and demand just gives you the advantage because you're trading where big money is going to be inputted, and that's exactly what's going to move the markets and move the markets fast, right? So boom, we had our demand zone, stop loss below the demand zone, and we had the target perfectly hit. Now, you can still see the zone never got invalidated. Market went on to just, do its thing. Market closed. But also, like I mentioned earlier, for this trade, we targeted this low, but it still ran to the next low here. So typically for me, I'm a scalper, so I'm really just looking to get in and out into those, quick trades. But for the people that do want to, or for the people that are looking for those bigger trades, you would then just look for the next key level, which in this case scenario would be these highs all the way up here. So if you want to be a little bit crazy, you can target these highs up here, and obviously that would be that. But for me, I always like to just play it safe and target the nearest key level as my main exit area. Maybe sometimes, let's say for example, this would be our take profit area. We would take, maybe sell 50%, 70% of our position, and then just kind of let it run from there because we're in the safe area. Sometimes I'll do that, but most of the time, boom, we just have our take profit area right here. I don't know why it's doing this. And then just let the trade kind of do its thing. Now, let's go ahead and find an example of a zone being invalidated. And I can see one right here. Now, it looks like this was another trade that I took off of our supply and demand zone. You guys can see here we had an aggressive move to the upside, obviously indicating lots of buying pressure being inputted, large candles. Large candles always mean more money is being inputted into the markets, more volume, right? And that's exactly where we want to be trading. We want to be looking for previous areas that had more volume being inputted. More volume equals more money, right? So let's just go ahead and kind of run through this thought process. So we see a large aggressive move. We mark out the candle that started that aggressive move. Boom, boom, extend it all the way out. Then, as you can see, price taps into our zone. We start to see some rejection. We see price respect this zone and not break below. We see some buying pressure starting to be inputted. We target the nearest previous high. Where's the nearest previous high? Boom, right here. We would mark it out right here at this high, right? And as you can see, that's exactly where price ran to. And then eventually it ended up invalidating the zone, which is another example that I want to show you guys. This is what a true invalidation would look like. Obviously, market closed here, but it doesn't really matter whether market is closed or not. The invalidation, as you can see, is where price breaks below and continues lower, where our candles would break below and actually close below that zone, right? As you can see here, the candle slowly started to break above, but it never closed above and continued higher. For this zone here, you can see it broke below and continued lower, which would invalidate this demand zone, meaning it's not an area of interest anymore. It's likely not going to be an area where lots of money is going to be inputted, like how it was previously, because market makers are pretty much going to be always looking for new areas to take advantage of. And sometimes it's going to be the demand areas that we were trading. Sometimes it's going to be new levels. That's why you can draw these zones out all throughout the day. You can draw these zones out the night before going into the next day. You can draw the zones out in real time. So for example, let's say none of this was happening, right? None of this was happening, and then finally we started to see this move. We're like, okay, I see this aggressive move here. Let's go ahead and then just extend this baby out. So if it does come back into our zone, we can see whether it's a valid area or not. And as you can see, that was the case. Boom, rejected, reversed, and hit our take profit level perfectly. So boom, that's going to be it for this video. Went over a couple solid examples for you guys in terms of what I look for and mainly how I draw the zones out. Keep in mind, I will be doing more parts leading on, into this strategy, going more in depth. But first, I just kind of wanted to start with something simple and something to, get you guys on the same level. But excited to be back and excited to be posting more videos. If you guys enjoyed, definitely, leave a like. Click the link down in the description if you guys want to follow my Instagram. I'm posting content, trading content over there every single day. And if you want to work with me, go ahead and click that link in the description as well. And I will see you guys in the next video. Have a good one.